In a world where time seems to slip through our fingers like grains of sand, there are moments that transcend the ordinary. On its 60th anniversary, the Philippine Deposit Insurance Corporation presents its captivating journey, where history, resilience, and innovation converge to resemble the formation of a magnificent diamond. Every diamond starts as a rough lump of carbon hidden deep within the earth. In pretty much the same way, the PDIC began as a nimble public service institution. Let us take a closer look at the corporation's early days. The creation of PDIC stemmed from the recognition that a stable and reliable banking system is crucial for economic development. In 1963, the Philippine Congress passed Republic Act No. 3591, known as the PDIC Charter. This legislation laid the foundation for the creation of the PDIC and defined its objectives and functions, which include the provision of deposit insurance coverage for deposits in Philippine banks. The maximum coverage limit was 10,000 pesos per depositor, and membership by banks to PDIC was voluntary. Just as a diamond undergoes intense pressure and heat to attain its stable structure, the corporation also endured the crucible of stress and pressure to temper it to the organization that it is today. A number of uninsured banks failed in the 1960s and 1970s, including cases of unrecorded deposits that had a profound impact on depositor confidence in banking. Learning from these lessons and to restore public confidence and foster financial stability, Republic Act No. 6037 was enacted into law in 1969 that made membership to PDIC compulsory. Later in 1978, the maximum deposit insurance coverage was increased from 10,000 pesos to 15,000 pesos through Presidential Decree No. 1451. Similar to how a diamond is formed, where immense pressure helps to transfigure the carbon atoms to its crystalline structure, the PDIC faced critical moments that pushed the institution to the brink. The 1980s were marked with economic difficulties, and the banking sector was particularly vulnerable, with some banks burdened by non-performing loans. Several banks also faced insolvency, with closure and liquidation of troubled banks, creating a wave of panic and loss of confidence among depositors. It was during this time that the World Bank recommended that PDIC takes a greater role in examining and in handling distressed banks. Among the major recommendations was the appointment of the PDIC as mandatory receiver and liquidator of closed banks. The institutional strengthening program crafted by the corporation laid the groundwork for an institutional and organizational restructuring aimed at addressing the expanded authorities for PDIC, including setting of upgraded standards, hiring procedures, and intensive training programs, and innovations in systems and procedures. By 1984, as part of confidence building, the maximum deposit insurance coverage was increased to 40,000 pesos per depositor from 15,000 pesos. As political and economic crisis swept the country, PDIC was amid numerous failed banks. From 1983 to 1987, 132 banks were ordered closed by the Monetary Board. Due to the string of bank failures, the government finally recognized the vital role of PDIC. Against this economic backdrop, Republic Act 7400 was passed in April 1992, amending the PDIC Charter and increasing the maximum deposit insurance coverage to 100,000 pesos from 40,000 pesos. The amendments primed the PDIC to take more active roles, which included the authority for PDIC to independently examine banks and to take on the consequential role as a statutory receiver and liquidator of closed banks. Just as a diamond is meticulously cut to unleash its brilliance, the PDIC hones its services, introducing innovative approaches and pioneering solutions. Like a diamond emerging from the depths of the earth, the corporation emerged from the crucible stronger, more resilient, and capable of achieving its true potential. Undergoing stress points forces an institution to reflect, innovate, and reinvent itself. During the 1990s, PDIC faced a significant stress point triggered by the Asian financial crisis. The Asian financial crisis led to a sharp devaluation of currencies, a sudden outflow of foreign capital, and the collapse of stock and property markets. By the 2000s, PDIC continued to play a vital role in ensuring the stability of the Philippine banking sector and safeguarding the interests of depositors. In 2004, with increase in the maximum deposit insurance coverage from 100,000 pesos to 250,000 pesos, came enhanced authorities, including the provision for continuing insurance coverage for banks, grant for financial assistance to distressed banks under systemic risk conditions, and investigation of banks for fraud, irregularities, and anomalies based on complaints received and reports of bank examinations. Just as diamonds go through polishing, the PDIC also engage in continuous improvement and innovation, always seeking to understand the corporation's strengths, weaknesses, and areas for growth to champion depositor protection and promote financial stability. The challenges of the global financial crisis in 2008, coupled with adversities in local front, provided opportunities to introduce confidence-building measures through legislative reforms in 2009. These included the doubling of the maximum deposit insurance coverage from 250,000 pesos to the current 500,000 pesos. The grant of flexibility to adjust the maximum deposit insurance coverage in the case of a condition that threatens the monetary and financial stability of the banking system, and institutional and financial strengthening measures to mitigate moral hazards. The PDIC also embarked on stepping up with global standards in its core business processes, starting with the ISO certification of its claims settlement operations to 9001-2008 standards. To date, 5 more of its processes have been certified to ISO standards, including assessment of member banks, loans management, real property disposal, and bank examination. It also measured its operations against the prescribed global standards of the International Association of Deposit Insurers for effective deposit insurance systems. The core principles of effective deposit insurance systems became the guideposts of PDIC in determining improvement gaps. Determined to be in step with international standards, the corporation allowed itself to be subjected to an external assessment by its global peers in deposit insurance. The PDIC's sustained improvements epitomized the refinement of a diamond. For its significant achievements in banking resolutions and payouts, core principles, and international participation, and deposit insurance system improvements, the PDIC received the highest honor for any deposit insurer, the Deposit Insurance Organization of the Year Award in 2013 from the International Association of Deposit Insurers. Even with this recognition, the corporation continued to pursue enhancements in its systems and process, and worked on legislative reforms to make the deposit insurance system more responsive to the changing financial landscape. In 2016, another round of amendments to its charter unfolded that allowed for enhanced depositor protection, providing depositors quicker access to their insured deposits in the event of bank closure, empowering PDIC to resolve problem banks while still open, hastening the liquidation process for closed banks, and providing stiffer sanctions and penalties to those who commit anomalies, frauds, and irregularities against the depositing public and the banking system. In 2022, 6 years into these amendments, the PDIC continued to reinvent itself, ensuring that the deposit insurance system evolves and addresses the changing times. The corporation is now empowered to adjust the maximum deposit insurance coverage based on inflation and other relevant economic indicators without the need for legislation. Additionally, the PDIC is now mandated to provide insurance cover to Islamic bank products or arrangements classified as deposits by the Bangko Sentral ng Pilipinas. Because of the peculiar characteristics of Islamic banking, the amended PDIC charter authorizes the corporation to establish a separate deposit insurance fund or takaful to cover these types of deposit products. To optimize regulatory coordination efficiency, the law also reclassified the PDIC as an attached agency of the Bangko Sentral ng Pilipinas. Amid institutional strengthening to carry out the mandates of deposit insurance and closed bank liquidation, the corporation never wavered on what needs to be done, and was consistently top-ranked in corporate governance by the Governance Commission on GOCCs, among government-owned and controlled corporations in the bureaucracy. Today, the PDIC shines brightly, having come a long way from its humble beginnings. Its journey, symbolized by the formation of a diamond, reflects its unwavering commitment to excellence, innovation, and public service. The stress points mold a corporation's character, just as the pressure shapes a diamond's brilliance. The lessons learned, the skills acquired, and the wisdom gained during these challenging times have become the foundation for future success. It builds a reputation for overcoming adversity and instills confidence in stakeholders. More than anything else, the testament to being the true gems are the men and women that comprise a PDIC family, the ultimate driving force that enables a corporation to champion depositor protection and foster financial stability. To the PDIC family, past, present, and future, thank you. We make PDIC the organization that it is. May you always take pride in being part of the country's one and only deposit insurer.